Good afternoon, participants and students. Welcome to our accounts management course for 2022, webinar 1. This is our first webinar for our intake. So welcome. I hope everyone has managed to join us, and I hope you can all hear me. I'm going to facilitate the webinar. I hope all of you can hear me. I think you can unmute so that you can respond.
Yes, we can hear you, Faustina.
Okay, thank you very much. So proceed with our webinar. And hopefully you can see my screen. Confirm, Grace, if you can see my screen.
Yes, we are able to see your screen.
Okay, thank you so much. I'm going to proceed with our webinar and introduce myself. My name is Faustina Caserera. I am your facilitator, the one who is assisting you with the accounts management course for this intake. I am a chartered accountant and a registered auditor, and I currently run a small practice where I am practicing accounting, tax, and auditing. Yeah, those are my credentials. And I'm going to ask all those people, like the participants on our forum who have joined, to introduce themselves. I hope it will be possible. We give each other turns to introduce ourselves before we can start with our webinar. Thank you.
That is not what I wrote in my notes. Do you have my notes? And you administered a structured clinical interview based on that framework, correct?
Hello, Amanda, may you introduce yourself?
Not quite right. Now, Dr. Hughes administered a full intimate partner violence assessment, correct?
Yes.
That's not a psychological assessment. We can't assess for intimate partner violence. That's an event.
Hello, hi Samantha. May you switch off your camera as well as switching off your mic, because we can't hear us.
I'm sure that yes. Okay. And are you aware that in September 2020?
Okay, thank you very much.
Good afternoon, all. I am Mr. Mkwachiana from Cape Town. Thank you.
Thank you. Teboho, may you introduce yourself? Okay, it appears some of our guests, they can't hear me. So we'll proceed. Let's proceed with the course. We'll introduce ourselves as we participate, because it appears we'll take time introducing each other. We would rather move on and discuss the course. Okay, so for the benefit of those who are starting with the online accounts management course, or who have never participated in the LSSA lead courses online, I'm going to show you how you navigate on the platform so that it will be easy for you to find material. Okay, I have shared a screen, which is the online platform that we use for our course. I hope you are seeing the screen. Grace, can you see the screen?
Yes, Faustina.
Thank you very much. Yes, this is our online platform. So what you do is that when you log in, this is what you see on your left. So you always navigate from your left. This is where you start from for you to get material. I will start with the introduction. Okay, so the introduction, if you go onto the introduction, it will give you the terms and conditions of our course, and also it will give you a brief introduction of our material, as well as it will show you where you get the course material. So our course has got a manual, and this manual is the one that you are going to utilize for your studies. It has got a lot of information on bookkeeping, and I recommend that you go through the manual before you can attempt any test or any assignment, because this is where most of our information is. So for you to download the manual, you click here where it's written, please click here. And then when you click there, you are able to download the manual. When you download it, you are able to save it on your computer. And if you want a hard copy, you are able to then print that manual, which you can then go and study. For those who can start from their tablets or from their computers, they can then just utilize it on their computers. In our course material, we have got our course notes, we've got our legislation and regulations, and then we've got referral to the rules and the acts that are associated with the legal fraternity, the legal industry. And also in our course material, you'll find the activities which are there, and then also there are examples. So you really need to download the manual for you to be successful in conducting our course. And our manual, it consists of 13 sections or 13 chapters. So of these 13 chapters, what we have done is that we have then gone onto the platform, and on the left side, there are tabs that gives you links into the 13 sections that we do have. When you go onto the tab, you are able to open and you get more information, and also you get tests and quizzes that you utilize for our course. And also on the tabs, you will find we've got a list of desired outcomes. So you would see for each chapter that we have, it has got its desired outcomes. So you go through, at the end of the day, you should be able to execute that. I'm going to go for an example. If I go onto the introduction to bookkeeping, so you'd find these are the outcomes. So we indicate to you as a learner what we expect you to be able to do after going through the chapter in the manual, and as well after going through the tab on the system. So you should go through these tabs, and then you see what is expected of you, and also you get videos that also explain further and give more information besides that one that is in the manual. Okay, I will go back to the introduction. Okay, and besides that, we also have the course content, which consists of material and videos, which I've said. We also have an activity, which includes a self-assessment activity, an example, and a solution. There's only one chapter, I think, or two, that do not have examples because they are theory. So we did not put any examples. As you know, our course is more of like a practical. You need to practice more. You need to work on your double entry for you to be able to be successful. And my assumption is that most of you have done bookkeeping at school level, and have done bookkeeping or accounting. Sometimes they call it accounting, and also you have done accounting at university level or at diploma level. So what we are basically doing here, the concepts are still the same, but now we are introducing bookkeeping, introducing the legal environment, how we need to treat our transactions in a legal environment. This is what we are doing in this course. So it's more of like managing our accounts with our suppliers, with our trust creditors, with our debtors. So that's why we call it accounts management. And also on each tab that we have on the platform, it has got a summary of that particular section. So you need to go through and then you read the summary, what we expect to have covered in each chapter. And then that is the introduction, that is the information that we do have. And also on our platform, you will see we've got announcements. So what you need to do is that you need to also click on the announcements so that you can see what we have announced. Like we've got a welcome note. On that welcome note, we have more of like put in information on the course, which will be beneficial to you. And as well, we have announced about this webinar, and then we've got further announcements. Whenever we open an assignment, you would find we do announce. So you need to also check the announcement tab. And then we also have a calendar tab. Our calendar shows you, if you navigate on it, it will show you the activities from the beginning to the end of our course. So what you do is that you can view by month, or you can view it by events. So if you want to view it by events, you come under view, you select list of events, and then it will more of like list the events for you for that particular period that you have selected. So in this case, we are starting in March, so you can select until the time that we are finishing the course, so that you cannot, we are finishing in July, I think around the 17th of July, and then you filter the events. So when you filter the events, you are able to see when the facilitator is online, and you are able to see when we are, like today, we are having a webinar. You could have seen that we are going to be having a webinar, and then we are going to have our first assignment on the 31st of May. So you see that after going to the calendar. So our calendar has got the events that we have up to the end, which is up to 15 July, when our course is going to be finishing. So you can go through and note all these events and participate where necessary. And then when it comes to our assignments, we also have got a tab for our assignments. So as explained in our welcome note, we've got a test, which is not yet open. The test is web-based, so it will open up, and then we have got our assignments, assignment 1, 2, 3. So if you go on assignments, it will show you when the assignment is going to open. Because we open the assignments and we close them, so that we give you time to work on a particular assignment, and also the facilitator can have a time to go and mark the assignments and then bring back the results. And then we do the same on assignment 2, and then we upload it, and then it opens up, you open up, and then you are able to study it. So basically this is these are the major functions, and then the rest are the tabs according to the chapters that we have in our manual. So you can open up and get additional information. And then the tests and quizzes, you come. Test 1 is under tests and quizzes. So test 1 should be attempted by everyone because it contributes to our course mark. It contributes 20% to our course mark. So test 1 should be attempted by everyone. So when it opens up, you should come under tests and quizzes, you go on test 1 and you attempt it. And then the other tests and quizzes, they are there for you to practice. So you need to practice, as I have said, this is a practical kind of like a subject. So you need to practice more. You need to practice more. So you should take your time and attempt these quizzes, these tests, because they'll be beneficial to you. And then the other thing that we have, we've got our grade book. After our assignments, you'll be able to see your grade book. So you can come under grade book and you'll be able to see your marks according to the assignments, according to the tests and the quizzes. And then we've got our forum. Our forum allows us to communicate. It allows us to communicate. So for you to be able to communicate with me, your facilitator, you come to the forum. You can utilize any forum. So each week I always open a forum, and also on the forum, I also add in notes. I also add in examples. So you should visit the forum so that you can get information on a weekly basis. I recommend that you do so on a weekly basis. And also the good thing about the forum is that you would find other learners, other students are already commenting. So if you check where it reads like 6 messages, it means we are communicating. So if you can go there, you'll be able to have some of your questions answered. So you should always check your forum because you get more information on the forum. And for you to leave in a message on the forum, you like on the welcome, we can use the general course discussion. You click there and then you can add in a new topic. And then when you add in, you'll be able to leave a message on the forum. And then I'll be able to see the message and be able to respond to your message. Okay, so that is the forum. It is very crucial for you to visit the forum because we leave notes and those notes are beneficial to you. And another way of communicating would be for you to also open a ticket. And also you can as well check the ticket system because on the tickets, you'll be able to see what other learners are asking and it can be beneficial to you because this is more of like an offline kind of like a course where I'm not available all the time. So these platforms will be able to assist you whenever you have answers that are not answered. So on our tickets platform, you are able to open a new ticket. You see where it's written edit, you are able to create a new ticket. When you create a new ticket, it is directed to me as the facilitator. And then whenever I see the message, it comes to my email, then I'm able to respond to your queries. I'm able to respond to your questions. And where you see that I have not explained enough, what you can do is that you can still respond to your query. And once you have been answered, you can then close the query. And then your certificates, after the course has been done, you'll be able to then download your certificates from the certificate tab. So this is basically our platform. This is what we are going to be using to communicate, what we are going to be using to post in announcements, to put in any resource that is necessary, and your assignments, you will find them here on the platform. So it is very crucial that you always visit the platform. Thank you. I'll leave the platform and I'm going to go back to my notes. Okay, for any admin matters, you can email Grace Mukuru. I think her email address has been you have an email address. She's been the one who was dealing with you pertaining to admissions and any technical issues like where you can't submit your assignments. Please email to Grace. You can as well copy me so that if ever she does not see it, then I'm able to communicate to you. Okay, so let's move to general matters. Like what I've said, I've already shown you how to get to the calendar. Our calendar is on the platform. So you need to go to the platform, you see the calendar. And then on the forum, I'll always indicate I'm always available once a week. So you should log onto the forum. If you do not log in the time that I'm available, you can always leave a message. And I am always monitoring the forum. And also I get messages to my emails whenever you leave a message. I have explained the announcement. So if ever we've got issues with our assignments here and there, we've got typo issues in our questions, or we've got things that need to be corrected on our assignments. So what we normally do is that we post in an announcement, and that announcement, what we also make sure that it's delivered to your emails. So once it's delivered to your emails, then you are able to log in and then check for any other information on the announcement. And like what I've said, we depend more on our manual, the accounts management manual. So you should start the manual. You should start the manual. Where you have any queries or where you don't understand the manual, especially the double entry system that is being illustrated on the manual, you should always come back so that we can discuss. I am open to discussions and suggestions and anything that can make our life easier and not miserable. And also, you should download your Legal Practice Act. Download your Legal Practice Act, and also you should download the rules of the legal practice. These are very crucial because, like our first chapter, it deals with the act, it deals with the rules. So they've got rules on accounting, they've got rules on bookkeeping, on how legal practices are supposed to be conducted and how the accounting records are supposed to be kept. So you should always refer to the act. You should always make sure that whatever that we are referring to in the manual is also there in the act, because what we try to do is that we try to remain relevant. Whenever there are changes, we also change to the new act. As you know, it used to be the Attorneys Act, and then the profession was merged. Now we've got advocates, now we've got attorneys together. So you'd find, of course, certain sections might refer to the Attorneys Act, but it's superseded. It was superseded by the Legal Practice Act. And the new sections which are in the Legal Practice Act are the ones that you should look at, we should adhere to, you should know, and you should refer to, because that is what is applicable now. Okay, and I've also explained that we've got a test. I've shown you on the platform where we get test one. Test one contributes 20% of our overall pass mark. Our pass mark is 50% and above. So anyone who's got less than 50% then is considered not to have passed the course. Okay, and then test one, it's more of like a theory-based test. Of course, it has got computations, but they are not so complicated. It also, like assignment one, it covers from chapter, I would say it covers from chapter 1 up to chapter 7. Okay, let me just try to do housekeeping. I need to check if there's someone. Okay, Kaya, I'm going to mute you, try to mute you. Yeah, I'm going to mute Kaya because there is a sound that is coming from the background which can affect our recording. Yes, and then our assignments, we've got 3 assignments, assignment 1, 2, 3. I've shown you on the platform how to get to the assignments, how to download your assignments. What we also do is that we send in an announcement which comes to your emails. So make sure that you do not block the emails that are coming from the platform so that the assignments can be delivered to you. When the system does it automatically, whenever it opens up, it delivers the assignments to you. And also, if you do not receive the assignment, then just log onto our platform and also download it from the platform, and then you can start working on the assignment. Our assignments are available for about 5 to 7 days. 5 to 7 days. Assignment 1 is not so difficult because we are introducing you. So it's a bit of theory, and it has got a cash book that we need to, a trust and a business cash book that we need to work on. So I'm going to show you an example of how to answer the questions pertaining to cash books. And then assignment two requires a bit of some time. So what I have also done is that I have opened it up for more days, I think about 10 days, because now in assignment 2 will be more of like introducing the legal terminologies. Like now we are looking at investments, we are looking at conveyancing, how we treat the transactions from those matters. And also we look at correspondence. So those 3 topics, and also VAT, and then there's also VAT. Those 4 topics you would find they require a bit of some time for you to answer. So we have opened it up for a longer time. So what you need to do on these assignments, you just need to plan your time. So for now that you do not have assignments, I would rather encourage you to go through the manual, especially chapters 1 up to 7, because that will assist you with assignment 1. And then once you are done, don't relax. Move on to the next chapters, especially chapters 8 to 13. Those ones, they have got more work, more information, more workings, more examples. Some of them you might even find it difficult for you to understand if you do not go through and work out how the answer was arrived at. So please put in time, manage your time, because bookkeeping, accounting is demanding. And we are there on the forum. I'm there on the forum. If I don't answer the same day, I will definitely answer. I'll come back to you. And also where you need examples, where you feel like the example that is in the manual is not explaining enough, I can always put in an example, though I try to minimize it, because with accounting, there is a lot of work. So if I put a long example, you find you lose yourself in the example. So never give up. Please ask for help. We are available to help you. We want you to pass the course. We want to succeed and achieve. You would find this course is very crucial for you, especially when you are to continue and do your practice management, or even for your day-to-day practice. It is very crucial. Okay, I will move to assignments. I've explained the assignments. So assignments contribute 80% of the final mark, which means each assignment is going to score 100%, 100 for the 3 of them. And then what we do is that we then take the marks for the 3 assignments, and then we divide them by 300, and then we multiply by 80%. That is what is going towards your final mark, because test 1 takes in 20%. So your assignments are very crucial. You need to make sure, most of the people you'd find, they submit assignment 1, test 1. the good thing about test one, what we've done with test one is that we have opened it up until towards the end. So you shouldn't put more effort on test one. You rather put effort on your assignments because your assignments contribute more towards the final. But what you need to do, what you need to make sure is that you also answer test one since it is going to contribute. When it comes to tests and quizzes, the other tests and quizzes for each section, those are for practice purposes. So with this subject, you need to practice. It's a practical subject. You need to work on your numbers. You need to be accurate. You need to be to the point for you to be able to excel. Because for us to award a mark, we look at accuracy. So when you are calculating, your formulas should be accurate. Okay, and then our assignments, assignment 1 covers chapters 1 to 7. And then assignment 2 covers chapters 8 to 13. Which means that assignment 1 and 2 basically cover the whole manual. They more of like cover the whole manual. And then what we do with assignment 3, it's more of like a rehash, but it's not a very difficult one because we look at how we have performed, especially in assignment 2. And then when we compile assignment 3, when I compile the question for assignment 3, I take into account on how you have performed on assignment 2. So we try to make it easier because already we know in assignment 1, we have covered the basics, your cash books, you now know how they are done. And in assignment 2, you now know, because it's a more of like accounting is a repeat. So whatever that we'll be doing, we'll still work on a cash book. We'll still work on the ledger. It's only that when we compose of these questions, we make them now to incorporate the other chapters. So your chapter 1 to 7 obviously would be basic, like our basic bookkeeping that we do in any company, in any firm. And for your chapters 8 to 13, then we are more of like technical because we want to cover what is in the legal field. Okay, so those are our assignments. I'm going to move to the next slide. Okay. Introduction to Accounts Management course. So before I can introduce the Accounts Management course, I think what we need to do, if you've got any questions, write them down on assignments, write them down so that we can quickly go through the material that I have prepared. And then from there on, then we can discuss your questions. The last part of the hour, we discuss your questions. So whatever that you did not understand, I'll go through together with you when we do questions. Okay, so our introduction to Accounts Management course. So Accounts Management course, it's basically legal bookkeeping. So it covers legal bookkeeping. So the concepts are the same for bookkeeping, for any bookkeeping or accounting course. It's only that now we have to then introduce the trust account because, you know, normal businesses, they do not operate trust accounts. But when it comes to the legal fraternity, they have to have a trust account. And it is the act that says so, that a legal practice should have a trust account. And the way that we treat trust transactions is different from the way that we treat business transactions. And it's far different from a normal business because trust transactions are just meant to be on behalf of our clients. So when we are recording, we are just recording them for our clients. So you will see when we introduce in a trust cash book, it will be slightly different from the business account. So we need to understand the difference between the two. And if you can go through the act, they stress the point that they emphasize the point that trust transactions and business transactions should be separated. They should be separate. They should not mix. So you cannot pay your salaries out of the trust account, even if you have your fees in the trust account. You need to separate your trust transactions. So when it comes to your fees which are in the trust account, you need to have a proper system that will ensure that you move your trust funds to the business account. And when the money is in the business account, that's when then you can pay your salaries, you can pay your telephones, you can pay your running costs. So this subject is very, very important for us because it is crucial for operating a trust, a law firm. It is crucial for a legal practice. It is crucial for also an advocate's practice, because nowadays I've seen that advocates as well can open trust accounts. So they need to have an understanding on how to treat trust transactions. Okay, and then I'm going to move on to chapter 1. Our chapter 1, it's basically the basic controls. It looks at the rules that are in the rules of the legal practice. So you find there are rules that are set on how we conduct our transactions, our trust transactions, our investment accounts, and there are rules that are set on how we conduct our business account, when to withdraw funds. So like what I've indicated to you, you really need to download the rules and you need to go through them, the sections. So you find our manual indicates the sections that are crucial for you, the sections that are important for you when it comes to bookkeeping, when it comes to accounting. One thing, I have worked at the Law Society for about 10 years. So you find they follow the rules. So when it comes to them visiting your practices, sometimes they just come for a visit. They look at whether a practice is complying to the rules, it's adhering to the rules. So you can be called for a disciplinary hearing if you are not following your rules. And also, I think they've got a unit, which is a monitoring unit, which just visits and comes and ensure that all the rules are being adhered to. So you need to know your rules. You need to stick to your rules. Okay, so when it comes to your trust accounts are mandatory. They are according to the Act. So if you go on section 86(1), you would find it stipulates that every legal practice that has opted to operate as a legal practice registered with the LPC should have a trust account. And then it therefore means that when you open your practice, the first thing that you do, you need to notify the LPC in your area that you are opening a practice. Of course, you are a duly registered legal practitioner and you can open a practice. So when you open your practice, and then they will require you to then go to the bank of your choice. And it's our banks like FNB, Standard Bank, Nedbank, and also banks like Investec. I think they do allow those banks. You can go and then you open a trust account. So the first trust account that is crucial, that is important, is your section 86(2) trust account. Section 86(2) trust account, you find that is required for you to have it. And even if you do not anticipate to have transactions like other law firms, you find they deal with criminal matters, they are dealing with matters where no money is paid, or commercial matters where money is really like paid in the trust account, but you would find the Act itself stipulates that you should have a trust account. So a trust account is always known as a Section 86(2) account. We normally refer it as well as a Section 82 account. And when you go to the bank and open it, you should also ensure that your bank opens and writes that this has been opened according to Section 86(2). So you'd find these trust accounts are governed and are more of like monitored by the Legal Practice Fidelity Fund. So they liaise with the banks pertaining to the interest and the bank charges that are charged on the trust accounts. Okay, so that's a trust account. Also, there is a trust account called a Section 86(3). A Section 86(3). It's more of like an investment account. So with the Section 86(3), it's rarely used, but in the past they would recommend it, and even now you find they are now recommending it to say if you've got those funds for clients, you are holding on funds for clients that you do not want to utilize immediately. So what you then do is that you can add up the different files that do have the funds, and then you transfer those funds to a Section 86(3) account. And then that account, it's more of like just holding those funds. And whenever you want to transact back on behalf of a client, then you move the funds back to a Section 86(2). So that's another trust account. And trust accounts you'd find you can open as men, a firm can open as men trust accounts as it wants. Like if you need a trust account for conveyancing, you can open a trust account for conveyancing. You can open a trust account for your civil matters. You can open a trust account for probably for collections. We've got clients who are specific who would say, I want a trust account for my matters so that I'm able to go through. Like municipalities, sometimes they do that. You'll find when you get a tender, they specify and say, we want a dedicated account for us. So what you just need to do is to open the account, and then you will notify the LPC. So you will need to notify the LPC. Each time you open a trust account, you need to notify the LPC so that they know that you've got a trust account. And with the trust account, you find if you operate it and it's not earning interest, the bank charges are borne by the firm. So which means that you need to put in money in the trust account to cover the bank charges. You need to put in money, or the practitioners, they need to constantly put money, because the LPC does not allow that bank charges eat into the money of the clients. So if ever there's a shortage which is being caused by bank charges, then you find it's a reportable offense, and your auditor is supposed to report to the LPC that there is a deficit which is being caused by the bank charges. So you find it's an admin issue, and you wouldn't want to be found answering letters on such small admin issues, because with the LPC, they do follow up on every item that the auditor the auditor notifies them. So you need to always maintain your trust accounts. And also a trust account earns interest. So what the Fidelity Fund has done is that they've made an arrangement. They've made an arrangement with the banks, the various banks. And with this arrangement, what they've done is that they've ensured that trust accounts earn interest. So if you go on the website of the Fidelity Fund, you would find the interest rates that they've agreed upon. So you can't negotiate an interest rate for a trust account because it's already like kind of like negotiated for. And then besides the trust account, we've got investment accounts. So when it comes to investment accounts, I've said there's an 863, which is the one where a firm opens where they've got excess money, which is not needed immediately for a transaction on behalf of a client. So for such an account, then you would find you can put in the money, and then the interest that is earned is paid over to the Fidelity Fund. Section 864, it's a special investment account. It's usually used for conveyancing purposes. I've seen it of late on some road extent fund matters where the court is the one that prescribes that whilst you are waiting for a trust to be registered, then what you can do is that you can you can open a section 864. So section 864s, they are investment accounts that we open on behalf of clients. So the interest that is earned in a section 84 is payable to the client. 5% of the interest is paid to the Fidelity Fund. Most banks, what they have done is that they've made an arrangement so that the 5% is paid over. But where the 5% is not paid over to the fund, then the firm should ensure that they pay as soon as they liquidate the investment, then they can pay the 5% over to the fund, and then the 95% it's payable to the client. I here and there hear about questions about admin fees. I'm not so sure about the admin fees, if you can charge admin fees when you open a section 864 on behalf of your client. Some firms do, they charge a fee for administering those accounts. So you'd find with the section 864, it has to be linked to the trust account, and it has the Act specifies that the banks that you have to use is recognized by the Banking Act. So you can't just invest anyway. You can't open a call account and call it a section 864. And a section 864, you should also ensure that it has got you should also ensure that it has got a reference to a particular client. You can't open it as a pool account. You open it for a particular client. So you should always notify the bank that they should open for each and every client, and you should obtain the bank statements and keep the bank statements as supporting documents in case there are inspections from the LPC or the client requests that they want to see what they've earned. You should have the bank statements. And then I'm not going to cover all the rules. Our time is moving. I can see time is moving. So I'm not going to cover all the rules, but the basic ones you would find a legal practice should account to its client. It should account. When it comes to accounting, whenever you handle clients' monies, you're supposed to submit a statement of account at the end of the transaction or in between. You should report back to the client and account and show them how much you have charged, your fees, or and show them what you have paid, the disbursements that you have paid. So for every transaction, it is recommended that you account. So you'd find if ever there are any issues or complaints that are lodged with the LPC, the LPC will ask for a statement of account. So it's more of like an invoice, but a statement of account shows how the funds, because we receive funds in the trust account, so it shows how the funds were accounted for, how they were paid out, how they were distributed on behalf of the client, because we are managing the client's funds. So we need to show, we need to be transparent. So you should ensure that is very important that you account. And also, like what I've said, you should distinguish a firm should distinguish between trust accounts and business accounts. We shouldn't see business transactions in the trust account. Okay, and then updating of accounting records should ensure that the accounting records are updated every month. It used to be every quarter, but now you find they should be updated every month. Like now that we are in May, I expect to see accounting records updated at least up to end of March. For those firms that have received their bank statements and everything, they should be up to end of April. So you'd find when your auditors are doing their work, they then check if accounting records are up to date. Accounting records, the crucial ones, the trust accounts should always be up to date. The business ones, of course, they are not fussy about an audit, but they always push that you are up to date, because for you to take your fees from the trust account, you should have invoiced from the business side. So your records should be up to date. And then trust money should be kept separate from your business money. So say, for instance, a client makes a mistake, they pay you in the business account. So immediately you should ensure that the money is transferred to the trust account. Okay, and then another rule is of prompt deposit of trust monies. You should ensure that whenever you receive trust money, you should go to the bank, deposit it on the day or the following day. Prompt, you should be prompt when it comes to trust money, because this is not the firm's money. This is the money which belongs to the clients. And also there is a crucial rule, which is trust balances should never exceed trust monies. So whatever that we owe our clients in the trust account, we should not be found with less money in the trust account. We should always have money enough to cover what we owe to the clients. So if ever there is a deficit, it's a big offense. It's a very big offense. And the LPC, they do not take it lightly. If ever it's reported by the auditors, you find they do not take it lightly. And the other thing, when you are preparing your books, always check for debit balances in your trust ledgers. So your trust ledgers should always have a credit balance. So wherever they go into debit, then it means there's a deficit. You have overpaid. Somewhere you've overpaid. So whenever there's a deficit, then go through, reconcile, correct your books, pay back the money, so that you are not found during audit to be owing your clients or to have your balances owing. Okay, and then transfers, when it comes to transfers from the trust account to the business account, you should always ensure that you trust or you transfer money that is in the trust account. Where you do not have money in the trust account for a particular client, there is nothing to transfer, then it means there is nothing that you would transfer to your business account. So you should always have your books up to date. So if you're having your records up to date, it would mean it's easier for you to be able to go to your ledgers, and you can see which matters have got money in the trust account. And when you check your business side, which then you are able to say, okay, which matters are we being owed? And then you are able to do your trust transfers. And also your withdrawals from the trust account. Withdrawals from the trust account should only be to or on behalf of a trust creditor, a creditor who has deposited his or her money in the trust account. So if there's no money, you can't withdraw on behalf of a creditor who has not put in money. So a trust account, more of it's based on what a person has put into the trust account. If a person is not yet, a client is not yet put in money in the trust account, it means we are not able to withhold. We are not able to withdraw money from the trust account. Otherwise, we are drawing money that does not belong to us. So what I'm basically saying is that where you need to transact on behalf of your clients who have not yet given you money, you have to transact from the business account. You pay on their behalf, probably it will be according to your agreement. You pay, if you're paying the advocate, you pay for them. If you're paying the sheriff, you pay for them. And then you can send them accounts, or you can then wait until they pay money in the trust account and then you transfer your disbursements back. And in instances where you have money in the trust account and you receive a bill from an advocate or you receive a bill from your sheriffs, what you can do is that you can then pay what we recommend, what the rules recommend. What the rules say is that you then need to pay out of the trust account. You do not transfer money from the trust to the business and then you pay the sheriff. No, we don't do it that way. We pay out of the trust account. But where you have received a bill or a statement from the advocate or from the sheriff before you have received money in the trust account, then yes, you can pay on behalf of the client from the business funds that you do have. You are more of like advancing your client. You can pay from there, and then after paying, then you can recover. You are allowed to recover your disbursements from the trust account. And then the other rules, the trust account management rules. So those ones you can actually go through the manual 1.16 and check the rules. And then pertaining to investment accounts, like what I've said, we can only invest money which is in the trust account. So what we do is that the money should be in the trust account. We go to the bank, we open an investment account, we transfer the money into the investment account, and from the investment, it comes back to trust. Then we pay for the various transactions. And I have explained the interest on Section 86.3s and Section 86.4s on how you manage the interest. The other thing that I had not mentioned when it comes to bank charges and interest, to make it easier, what the Fidelity Fund has done, they've made an arrangement. They call it a sweeping system. So with the sweeping system, you go to the bank, you tell them to activate the sweeping system. So what it does is that where the bank charges are higher, it automatically redirects the bank charges to the business account. Where the interest is higher, what it does is that it deducts the bank charges from the interest and pays over to the Fidelity Fund the balance of the interest, the net interest that is due to the Fidelity Fund. So they do it on a monthly basis such that you do not have to worry, because I saw now LPC has said, or the Fidelity Fund, they've said interest is now payable on a monthly basis. So for you to manage that, it can be cumbersome for you to, transfer interest over on a monthly basis. So the bank can actually do that for you. Okay, and then retention of accounting records. The Act says we should retain accounting records for about 7 years. So you should ensure that you have retained the accounting records. And then other statutory requirements, when a practice is registered, one can register it as a sole practice, as a partnership, as an incorporation. An incorporation, it means you engage CIPC, the company's commissioner, the registrar of companies, engage them, you register with them, notify the LPC about the registration, give them the registration documents, then it means it's now a company. So those are the 3 avenues that are there: as a sole practitioner, as a partnership, or as an incorporated. So when you register like that with the LPC, open your bank account, then you should then ensure, like if you are to employ, then you register with the Department of Labor, your UIF, so that you contribute towards UIF for the employees. And where employees and you as a director, if it's an incorporated, are earning above the tax threshold, then you have to register with SARS. When you register with SARS, you register for pay as you earn, and automatically you register for UIF. So when you automatically register for UIF, then it means your UIF contribution, then you contribute it through SARS, and then when you contribute it through SARS, and then they remit over to the Department of Labor for UIF. So the Department of Labor, what then it requires is just for you to, on a monthly basis, to submit declarations. They now have an online platform. They call it uFiling, www.ufiling. That's where you can register. First of all, when you are registering, you register in your personal capacity. And then after registering in your personal capacity, you can then add in a business. And then with SARS, if you are a sole practice, then you register in your personal capacity, and you register pay as you earn in your sole capacity. And on behalf of the firm, then you submit the returns. And if it's an Inc., currently with SARS, you register on e-filing on your personal capacity, and then you add in your company. You make yourself an organization, you add in your company, then you are able to submit your returns. So those are the other statutory requirements. And then there is income tax. Income tax, every practice, the main idea of having a practice is to make a profit. Profit is basically income less your expenses. So the government is interested, it's also interested in the profit. So if you are as a sole practice or as a partnership, you are taxed in your personal capacity. So whatever that happens under the firm, then it means you have to keep the accounting records of the business account on the business side. And then when you keep them, you record your income, you record your expenses for a particular financial year. And then on a yearly basis, you do your submissions to SARS. And when it comes to income tax, payments are done every 6 months. Every 6 months, payments are done, and they call that provisional tax. So those are some of the statutory requirements that you would require for a practice. And there is the Financial Intelligence Center. When you open a practice, you have to register with FIC. It's I think now with the LPC, you can proceed without having a FIC number. So you should always ensure that you are registered with FIC, and also they've got their requirements, declaration requirements. So you should always ensure that you have done the declarations, like where you receive 25,000 in cash from a client, then you also notify FIC about the receipt from a client, and also the requirements to FICA. We call it FICA your clients. You will FICA your clients, make sure you collect information that is required in terms of FICA. So those are the registration requirements that we do have. I'm going to move on from our basic control principles, and I'll do an introduction, a brief introduction. I'm going to be a little bit faster so that we can discuss, I can show you how to work on a cash book. Okay, so the principle of, so the bookkeeping is based on the principle of double entry. Double entry. So when I was young, when I started studying accounting, people used to tell me about what you put on your left is what you also put on your right. So it is the same principle of debits and credits. So every transaction should be recorded. It should have a debit recording. It should have a credit recording. So that is a very important principle for us to be able to do our bookkeeping, for us to come up with our financial statements. We base our theory on the double entry system. Okay, so the double entry system, every transaction, which means everything that we do, every transaction, because remember, bookkeeping, accounting, we are worried about transactions that go on in a practice. Every transaction should be recorded, be it cash, be it credit, be it a transaction that is going through our bank account, it needs to be recorded. So when we are recording it, that's where we use the double entry system. So I will illustrate the double entry system when we are working on the cash book. And I hope also you have gone through the manual for you to be able to understand the double entry system, how it works. And also, I believe you've got a bit of some background from your high school as well as college degrees where you did accounting. So the double entry system, what it leads to what we call the accounting equation. The accounting equation, basically, at the end of the day, everything that we post, when we add up and come up with totals, our assets and our liabilities should always equal our owner's equity. So our owner's equity, it's basically your income less your expenses. So I will illustrate the double entry system. And also, where you have questions, I believe you understand what assets are, what liabilities are, and the owner's equity, and also what income is, what expenses are. But if you do not understand those ones and you have done bookkeeping a long time ago, we can rehash, we can then discuss, because we should move on now. And then we have what we call our accounting cycle. I will discuss it in the coming slides and illustrate how the accounting cycle works. And also we've got what we call financial periods and financial years. So in bookkeeping, in accounting, we account for a particular period. We account for a financial year. So a financial year, it's usually defined. If it's a company, you would find the company registration document will stipulate the financial year end. So it will show the month on which the year will end. So say, for instance, the year ends in December. Then it would mean if our year ends in December, the following January, we are going to start a new financial year. So we'll account for our transactions from January to December, January to December, January to December, just like that. Here in South Africa, you find most companies, they have various financial year ends. So you need to have a look at the company registration certificate for you to be able to determine the year end. The common one, it's a February. It is the one that I more of like recommend, because it more of like it works handy, especially when you are preparing the IRP 5s and the EMP 501 reconciliations for salaries, and also any documents for labor. They run on a March to February year end. So that is the year end that is more of like recommendable. But if a firm does not run on such a year end, so it will be basically the business account that won't be running on such a year end, which is March to February. Then it means that you then have to know their year end. Even some firms, you find their trust reporting year ends also differ. So it depends with what they've registered with the LPC, the Legal Practice Council, as their year end. So you need to you need to know the year end of a company that you are working on for you to be able to prepare their bookkeeping, for you to be able to prepare their financial statements. Okay, and then when it comes to trust audits are supposed to be done every year. Usually, most firms, I would say most firms or most practices, they run from March up to February. So the LPC gives 6 months after year end. So if our year end is February, we are given 6 months to run until end of August. So you are given 6 months to prepare the audits, your records, give them to the auditor, and then to report to the LPC. If you exceed 6 months, you find they fine. They've got a very good system. They track the audit reports and you find they end up fining. Okay. Okay, and then our next chapter is on trust and business principles. Trust and business principles, you're looking at what is trust money. So if you can go through the manual, it will explain to you what is trust money. Money that a firm or a practice holds on behalf of another person. And usually this is for an underlying transaction. There should be a transaction that you are holding that money for. Say, for instance, you have a matter, a civil matter, where the court says you are supposed to be, the firm is supposed to be having 100,000 in trust. Then the firm will hold 100,000 in trust until they get paid. And also firms, the good thing about the legal field is that I've seen that when it comes to your fees, you can actually ask for a deposit for your fees. So when you receive a deposit, that deposit is supposed to go to the trust account, receive it, you debit the trust cash book, and then credit the creditor who has paid in the deposit. And when you have done the work, that's when you can then start billing the client for the fees. You notify the client. Once the client approves, then you can do your trust transfer into the business account. Okay, and then business money. Business money is money that belongs to the business. That is after you have done the work, you receive your fees, then that money belongs to the business. The business can utilize it for business operations, which also includes statutory requirements, statutory payments that needs to be paid. Okay, and then we should always identify trust and business transactions. We should always identify trust and business transactions and separate them. If ever you keep trust money in the business account, you end up utilizing the money, and it's not nice when you are in trouble with the LPC. So always identify trust money and move the money to the trust account. And then there's a concept of trust creditors. Trust creditors, all the creditors, the clients that have paid their money into the trust account are called trust creditors. If you have not yet taken money for fees, then the money belongs to the trust creditor. You can't go back and say the money in the trust account is mine because it was paid as a deposit towards a matter that I'm handling. You can only claim the money after you have raised an invoice in the business side, and then it shows that you can now transfer, and also you have accounted to the client. That's how then you can claim to say, this is now my money. Otherwise, where you have not yet raised an invoice, or where you do not have an invoice from the advocate and approval from the client, then the money belongs to the trust creditor. It belongs to the client. And then business creditors, these are suppliers who are owed by the business. These are suppliers owed by the business. So say, for instance, you have a telephone line from MWeb, and you owe MWeb, then those ones become business creditors. So the difference between the two is that these ones, they are owed by the business. Trust creditors are owed by the trust account, the money that is held in the trust account. And then also you should start on composite accounts. This is where you receive money which is mixed up, trust money and business money. So usually you receive it in the trust account, then you pay over until you remain with what is supposed to be trust money. Okay, so our accounting records and systems, when it comes to bookkeeping, for you to be able to keep books, you need to have source documents. You need to have source documents where a transaction originates. So every transaction should originate from somewhere, should be recorded somewhere. You should be able to refer back to the source document. It can be a bank statement, it can be a receipt book, it can be a journal where you have a journal where you have recorded the transaction. So you need to have source documents, you need to have invoices, you need to have slips, you need to have receipts from suppliers. Because say for instance, you are to be investigated by SARS. So SARS will say, can you give us an invoice? Then you should be able to produce an invoice. You cannot record transactions from anywhere. You record from source documents. And then from the source documents, we need to record information on the source documents. We record it on the books of prime entry. The books of prime entry, this is where we start recording the initial transactions, like your cash book. If you look at your cash book, we call it a book of prime entry because when you take your bank statement and your cash book transactions, anything that goes to the bank, you record them in the book of prime entry. And also like your fees, you raise invoices. When you raise invoices, you can do your fee journals. When you do your fee journals, then you take the totals of the fee journals into the ledgers. So that journal or that fee book becomes your book of prime entry. So those are important books. A firm should always ensure that it keeps its fee book, it has kept its cash books, and of late, because of now there are no checks in circulation, so you find most of the transactions occur on the cash books. And the other cash book would be the petty cash book, where you withdraw cash and you go and buy things on cash. Then you need to record the transactions from the source documents, the invoices, the receipts onto the petty cash book, and then from there, then you can record on your ledgers. So with most now it's a modern world. We've got technology, so you find most of our transactions are recorded electronically. We've got softwares like Sage, we've got softwares like Wave, we've got a lot of softwares that we can actually utilize to record our books of prime entry. It doesn't have to be manual. Like you can actually invoice in Sage, send the invoice to your client. Once the client pays, you receive your bank statements, you capture your bank statements on Sage, and then automatically we get your ledgers. So your books of prime entry usually record the first leg of the double entry. And then your ledgers are the ones that record the second entry. So depending on the transaction, it can be a debit or it can be a credit in a book of prime entry, or it can be a debit or a credit in the ledger. So as we work out our example, we'll be able to show that. So after preparing our ledgers, so we total them, we balance them off, and then after making our totals, we are able to create what we call a trial balance. So a trial balance can be created on a monthly basis. If you are using software, it's easy because the software will automatically then create for you a trial balance, which should balance. A trial balance should balance as every transaction has got a debit and a credit entry. So whatever that you do to the left, you do it to the right. And then there is what we call adjustments. Adjustments are for those transactions like depreciation, which are off, when you buy assets and you have to depreciate them over 5 years, where you are now applying accounting standards, like your leases where you have to then adjust for interest and things like that. That's where we then pass our adjustments. And then after the adjustments, we are able to prepare our financial statements. So that is our accounting record system that you should master. But over time, you remember it, because we will be working on these things. Of course, we won't get to the financial statements, but we'll get up to the trial balance level. Okay, and then when it comes to our cash books and ledgers, we've got trust cash books, we've got business cash books, and petty cash books, sorry. We've got trust cash books, we've got business cash books, we've got petty cash books. Like what I've indicated, trust transactions should never be mixed with business transactions. So when you are accounting for your trust transactions, you should account for them outside of your business transactions. There should be a separation between the two, or you should be able to track. When you're doing your ledgers, you should indicate that these ledgers are for the trust account, and when you reconcile them back to the trust cash book. And as I have indicated, you can have as many trust accounts as a firm can have as many trust accounts, or a practice can have as many trust accounts as it wishes, but for each trust account, bank account, there should be a corresponding trust cash book. So that is the catch, which means you will have quite a number of cash books which correspond with your number of trust accounts. And then when it comes to the business cash books, it is the same concept. When you have 5 business accounts, then we expect to see you with 5 business cash books. And then the petty cash book, it is there to record any petty cash that is advanced from the business account. There are those small transactions you find if you want to buy items from people sitting by the corner. You might not be able to buy them by doing an EFT or an e-wallet. These days there is use of e-wallet. Some amounts are too small, so we end up utilizing petty cash. So basically what happens is that the practitioner will go and withdraw some cash, or they do an EFT into a common account, withdraw some cash, and then that cash is kept at the office and utilized to pay for those small items. So a petty cash book is therefore utilized to reconcile that money whilst it is in use, and then whenever it gets replenished, it is just like the way that we are receiving money in a bank account. Okay. And then ledgers. Our ledgers usually are the ones that carry in the second leg of the transaction. The first one is recorded in a cash book, or it's recorded in a book of prime entry, and then from there we then record in our ledger. So with our ledgers, we have got general ledgers. General ledgers are for your assets, for your liabilities, for your equity. They are for your income and for your expenses. And then we have got client ledgers. The client ledgers for the trust account, we've got what we call the trust creditors ledger. And then for the business, we've got what we call the debtors ledger, or meta ledger, or client's ledger, which is to record all the transactions that we carry on with the clients. And then after recording our cash books and ledgers, we are supposed to reconcile them. Our cash books are reconciled against the bank against a bank statement. So each cash book should have a bank account with a bank statement, which is reconciled separately. So usually this is done on a monthly basis. And even the business cash books also are recorded on a monthly basis, and also against the bank statement, and then we come up with our reconciliation. So it's for every account. Our pet cash book, you find some firms, some companies, they keep a manual cash book, a manual pet cash book, where they record every purchase that they are doing, every cash that they have received, and at the end of the day, that is then reconciled against the one that is electronically prepared. Thank you. So those are our cash books and our reconciliations. And then next we are going to have a look at an example. So this example is for a cash book and a ledger. We are going to record some transactions in a cash book and in a ledger. What I will do is that I will try to record probably 4 transactions, illustrate to you how they are recorded in Excel, and so that we can have time for those with questions. So I will start with our trust cash book. So our example is saying record the following transactions in a trust cash book and business cash book and balance off. So what I have done, I'm going to utilize Excel to record for you. I am going to share the screen. Just excuse me, I want to switch on my light. I'm going to share this screen with our Excel screen. Hopefully you'll be able to see both screens. I think the question was shared to the group. So I will try to minimize. So our first question is that we should record on 1 August 2021, we had an opening balance of 5,000, which is a debit balance. So for us to be able to record that transaction, we go to our cash book. So I will show you how a cash book looks like. Let me maximize. This is our cash book. So it has got a debit entry. It has got the debit entry, which we post all the receipts. And then it has got, I'm going to highlight this with green, and then it has got a credit side. Sorry, it's these are sides that we are going to record all the payments. So our cash book should record as much information as possible. It should actually have a date, it should have a description, it should have a folio, it should have an amount. And on the payment side, it should also record similar information. So the transactions are determined by the practice as we transact. So our bank statement usually would show us the transactions, or previously it used to be checks. So whenever we are issuing checks, you would find then we go through our checkbook, and then we record those checks that we have issued in a particular month or in a particular financial period. For now, I think most firms, what they do, they keep requisitions. So for every invoice that is paid out, they first of all gather the source document, they attach a requisition, which is then sent to the practitioner, if ever there's a bookkeeper or a clerk, admin clerk, and then the administrator would approve of that requisition and the invoice for payment. And whenever there is funds or funds available to pay, then you would find then the administrator or bookkeeper can then load the transaction on the bank account online. Things are done online now. So I don't know how else they're done. Maybe some people go to the bank with the requisitions, with the account details of the recipients who are receiving the money, and then the transactions are then they are then processed. So when those transactions are processed, so those source documents that you would have received, those are the source documents that a firm can then utilize. They can actually record from there if they are not having the bank statement, because sometimes you find some firms, they receive their bank statements after every month, like after every 4 months, 4 weeks. After every 4 weeks, that's when the bank emails the bank statements, or they go to the bank, they obtain the bank statement. But for those ones with online banking, they are able to log in and download the bank statement and have a look at the transactions, or even the application, have a look at the transactions. And also when it comes to receipts, receipts can be recorded as soon as you receive a proof of payment from a client. Then you find a firm can start recording its trust cash book or its business cash book, because you would have received information from the client. You can plan and see what you need to pay. Okay, so in our question, I will take you back to the question, which says 1 August 2021. So this is our date. Hopefully you'll be able to draw the lines in Excel. If you are not able, then you let me know. I can always post a template for you on our forum so that you can even also work on your assignments. Okay, so we are told that on 1 August 2021, we had an opening balance of 5,000. So our date would be 2021-08-01. So that's our date. And then our description would be the opening balance. So if it's a debit, our receipt side of a cash book, that is going to be our debit side. And if it's indicated that it's a credit, then it means we've got an overdraft. We are in an overdraft position. Our money is overdrawn at the bank, and we've got a facility with the bank. So opening balance, folio, this is if ever you want to do references to your ledger, you can then utilize the folio. And then the amount, you put in the amount. So this is how we record our first transaction, is our opening balance. So with this opening balance, usually you would find it would, like in my case, when I give you the assignments, then I would explain to you how the 5,000 is made up of. Because whenever we have money in a trust account, it means we are holding money on behalf of someone. So if I indicate that the 5,000 is for a matter for whoever, then automatically what you do, you create a ledger, a trust creditors ledger for that particular client. You show that there is 5,000 which belongs to them on the credit side. Okay, let's record our transaction 2 August 2021. Mr. Govender deposited 50,000 into the trust account for a litigation matter. So on 2 August 2021. So you find some firms, they utilize file references. So if ever they are file references, then it's easier, because you would find Mr. Govender could be having 5 matters with the firm. So sometimes you can utilize file references as your description. So it would be Mr. Govender, and then you indicate which matter it is. Like in this case, I can indicate that it's a litigation matter, so that if ever he's got any other matters which are supposed to be separated from this one, we account for them separately. The amount that we received, what we receive in a cash book, it's a debit. So we debit the cash book with the 50,000 that we have received. So all receipts are debited, all payments are credited. So for this particular transaction, because now we know it's 50,000 that we've received from Mr. Govender. So what you can do, you can as well start working on your trust creditors ledgers. So what I'm going to do is I'm just going to copy the template. But I do not take time. And I am going to remove the colors. So in this case, when it comes to ledgers, when we are now working on our ledgers, what we do is that we then call, let me enlarge it for you. Our receipt side, we then call it the debit side. And then our payment side, it's now called the credit side. So the debit side is always on our left, the credit side is always on our right. So in this transaction of Mr. Govender, what we have done is that we have debited the cash book. We have debited the cash book because we are receiving, it's a receipt. So we debit the cash book. So to complete the transaction, we have to credit. And what do we credit? We credit the ledger of Mr. Govender. So I'm going to indicate that this ledger is for Mr. Govender, is for litigation. If we had file references, then I'll also indicate the file reference like that. And then it's on the 2nd of February. So our date is 2nd of August 21. And our description, in this case, where did the money go to? It went to the trust cash book or it went to the bank account. So that is our correspondence, so that when we are looking for this particular transaction, we know that the money was paid into the bank account. Then how much was it paid into the bank account? It was 50,000. So when you look at these transactions, whatever that has happened on the left side, left side is what we do on the credit side. So we would have said we have recorded our transaction, our first transaction. In this case, we are just being told to record in a business, in a trust cash book and a business cash book. So there is no need for us to record in a ledger, but I had to illustrate for you how to record in a ledger so that when you are given a question, then you are able to record in a ledger. So when it comes to trust transactions, we are basically having the cash book, we are having the ledgers. We deal with the cash book and the ledgers only. And the other thing is just ledgers for the bank charges and the interest, which we consolidate into the LPC or Fidelity Fund account. Okay, I will record transaction 3, which is on 4 August. SAPS paid 40,000 into our trust account on behalf of Mr. Maluleka. So it's 4 August 2021. Our client is Maluleka. We can indicate from SAPS. Just like the way that we indicated that one was for litigation. And then we record the amount. So this is how we record our cash books. And then on 8 August, we paid Advocate Pantonte 10,000 on the Govender matter. So when we are paying, then it means we are now paying out of our credit side of the cash book. So it says 8 August 2021. So it's our matter of Govender. We are paying advocate. And then we put in the amount, how much are we paying? 10,000. So we have recorded this transaction. And if I can go back to the ledger that I've created for Govender, now go back to the ledger. So since we have credited the cash book, it means this transaction where we have paid the advocate, we are going to debit. We are going to debit the ledger for Mr. Govender. So it's 8 August. So it's our bank account. It's advocate 120. That, and then how much? 10,000. Like that. So this is the ledger. I will open up. Let me just quickly record, and then I'll open up the cash book and the ledger so that you can see the overall, the two sides, how they appear. And then on 12th August, paid Mr. Maluleke 30,000 as a final settlement. So Maluleke. Oh, sorry. I'm recording on a wrong side. Sorry for that. It's a payment. So payments, we record them on the side. So it's on 12th August 2020. We are paying Maluleke settlement for his matter. Maluleke is our client. And how much are we paying? We are paying 30,000. So that's how we record. Then after recording that transaction, you go to the ledger, you record in the ledger on the debit side for Maluleke. I've not created that one. I assume you will be able to continue from there. And then it says 25 August 2021, we transfer our fees of 15,000 from the Govender matter. So usually before we can transfer our fees, it means we would have raised our invoice on the business side. When we raise an invoice, then we are debiting Govender with the 15,000 or with whatever that would have done for our work. Say we've done work for 20,000, we raise an invoice for 20,000, but in the trust account, we transfer 15,000, then that's what we then transfer to the business account. So in this case, on the 25th of August, we've agreed to transfer 15,000. So it's a payment from the trust account and it's for fees. So it can be fees or fee transfer. That, and then we record our 15,000. So if you go to the ledger for Govender, when you come, you also record that transaction. It's through the bank account. And it's a fee transfer. Like that, how much? 15,000. And then we paid the Sheriff Pretoria 250 on the Maluleke matter. So if whenever we are paying, we come and it's Maluleke matter. So I'm now just doing a bit of shortcut so that we can finish and have time to discuss. And it's so it's not fees, it's we are paying the sheriff. And how much are we paying? 250. Just like that. So this is how we record our cash book. And we've got other transactions on 25. Again, we transfer our fees on the Maluleke matter. So that's how you record you record transactions in the cash book, and I hope this will make your life easier. And then on 31 August, so like what I have said to you, these trust accounts, they are conditioned, they are set such that they receive money. Whenever we've got balances, there's money that is received in the trust account for interest. So on 31 August, we received some interest. So whenever we are receiving, what do? We debit, and it's interest that is supposed to go to the Fidelity Fund. And also on 31 August, we paid bank charges of 324. So we go on 31 August 2021. It's bank charges. And it's 324. So this is how we record our transactions. What I have not done, I have not created a ledger for Maluleka, which I will leave. I believe you can follow suit and record the ledger. And then for you to balance off, what you do when you're balancing off, you look at the side between the debit and the credit. You put totals, you look at the side that is higher with a higher total. It means the side with the lower total is the one that needs to be balanced off. That is the one that gives us our balance. So at the end of the month, say 31 August, we are done with our transactions. We can now balance off. We are going to carry it forward to carry this balance forward. So how you calculate, you can do it manually, or you can do it using the summations. So if it's manually, say for instance, if you add up the side, you will find it's 95,520, and then that 95,520, you then subtract the balance of this side, and then you get your balance becomes 30,196. So when you come to this column, you can insert your balance, and at the end of the day, the two sides balance off. So it means this is what we are carrying forward. Then when it comes to our trust creditors, then we should also show trust creditors which are sitting with 3196. So this is how we record our trust cash book. I am not going to proceed with recording the business cash book because our time is running out and I need to check if we have questions. Okay, I need to check if you've got questions. What I'm going to do is I'll open up for questions. If you've got any questions, you can, you can ask me, then I'll be able to answer. If you want me to illustrate further, I can continue with illustrating. Thank you very much. Yes. Is it Funu, or you may ask your question? You can unmute.
Well, sorry about that. I didn't even notice that it wrote a wrong name. My name is
Oh.
Amukelang.
Amukelang. Okay, no, it's
Yes.
fine. It's okay.
So my question is based on the trust cash book. On activity, we had various activities to do on chapter 5. And on the chapter 5, the activity that we were given, after doing my transaction and looking at the solutions that were given, we had a journal. So transferring our fees to the business account from the trust account, they used a journal. So I can see that in your example, you did not use a journal. Does it really matter?
Okay, yeah, they more of like recommend a journal because you know the reason of utilizing journals is that it allows you to record down. You see, it's our book of crime entry. You see, so it allows you to record down the transaction, and then you internalize the transaction, and then after internalizing, still you need to go to the cash book and record it. So when I say I want a cash book, I don't want journals. What I expect then to see from you, I expect to see that transaction of a fee transfer in the cash book.
Or the question will state.
The question will say we transferred fees of 15,000, just like there, but you find the question as well. Normally we state there's no need for you to draft or to show journals on in your answer, so that we minimize. You find if we are to show all the journals that one has to come up with, then the answer would be so bulky. So at the end of the day, you can do it in your workings. If you are working on a rough piece, you do your journals because they assist us with internalizing the transactions to say which one is the debit, where it is going to be paid. Is it going to be on the credit or on the debit, just like that? But my questions to you would be, do not show the journal entries.
Okay, thank you.
Yes, Tanya.
Thank you so much for that. I wanted to ask if it's
Hello, hi, Tanya. We can't hear you clearly. Are you able to increase your volume a bit?
Yes, I have increased. Can you hear me now?
Very, very faintly.
Very faintly. Okay, let me just try and do this for a second. What about now?
Yeah, now I can hear you.
Okay, I want to say thank you so much. Is it possible if you can continue with the illustration?
With the illustration of the cash book.
Yes, please.
Or you want to see the business cash book?
Yes, please.
Okay. Hopefully we are not set up. If we are not set up and I am able to continue, I will do that after we have received most of the questions, so that I'll be able to answer. And those who are comfortable with recording a cash book, if they feel like leaving, then they can leave. And then I will then continue and we do the business, the business transactions. Is it fine with you?
Yes, no, that's fine.
Okay, thank you so much. Any other question? Okay, I see a chat. There's a chat from is it Elsa? Kaya, where it's saying, please try by all means to save the recordings for us and make it available for us. It's very useful. Yes, we are recording, so the recording will be made available. Hopefully it will be of good quality, because they will have a look at that on whether it has managed to record properly and it's of good quality and it can be passed over to you. But yes, they will try to do that. Any other question? Yes. You said what was your name? I didn't even
Sorry.
Yes.
My name is Amo.
Okay, yes,
Yes, I just wanted to ask again on the trial balance, when we are doing our trial balance at the end of the month, do we always include the balance brought forward?
Yes, we always include, like, isn't it when we are preparing our ledgers, we start with the balance brought forward. You saw on the cash book where the balance of 5,000 that was brought forward. So we take in the balance because our balance brought forward on their own should balance when we start with them. That's why when I was doing the cash book, then I said to you, this 5,000, like normally, like when I give you a question, I would even tell you that this 5,000 opening balance, it's a balance for this creditor. So that when you start with that creditor, then it balances off. And when you continue with that creditor, you continue from the opening balance going forward. Because sometimes with a trust account, you would find your opening balance is, that is the one that we are paying against. So if we don't have it, then it doesn't give us an insight of what we are doing because we won't know where we are getting the money from. So your opening balances are crucial. For the income statement items like your income and your expenses, like when you are recording during a financial period, you always carry the balances. But when you come to the end of a year end, then the balances fall off because then they go into equity.
Okay.
Yes.
Okay, thank you.
Yes, any other question? Let me go back, yes. Okay, it appears we don't have any other questions. So there was a request that I should continue with showing showing how to record the cash book. So I had done the trust account. What I'm going to do now is I'm going to show you how to record the business transactions. There are not many, it's a few of them. So yeah, let's quickly work on them. Okay, so what I'm going to do, for me not to waste time, I'm going to create another workbook and then I'm just gonna call it the business. And then I'm also going to copy this information. So you should always be able to copy information from one workbook and then you delete what you do not require. You see, even your ledgers, you should copy information and delete what you do not require so that you do not waste time when you are working on these questions. Okay, so our trust workbook should trust transactions separate from business. So whenever you are preparing, you can have two worksheets, one for your trust, one for the business, and then you start with the cash books and then you do your ledgers underneath. The advantage of starting with your cash book is that whilst you are recording, then you can go and record your various ledgers, one transaction at a time. If you record the cash book and you do not go back, go down and record the ledgers, then you would find you omit some transaction and then your double entry will not it will not balance. So let me do the business one. I am going to take the question from our side by side like that. Okay, so in our business ledger, we are told that on 1 August 2021, we had an opening balance of 3,750. So 1 August 21 opening balance, and also it's return debit, so it has got a debit balance. So you should always master that it can be a credit balance, especially our business account, because with the business account we can obtain an overdraft, but with a trust account we can't obtain an overdraft. But here and there it happens that our trust account is in it's an OD, probably because of we were not transacting in it, we did not put in money to cover the bank charges, and then the bank charges causes the account to be in overdraft. So it happens. Let's not rule it out. Okay, so that is our opening balance. So usually you'd find, I would have said probably the corresponding entry would be retained earnings, which means that is our profit. We've got a profit of 3,750. So when you record your opening balance, then your credit, when you come to your credit, then these are now our general ledgers. We are now recording our general ledgers because now we are talking the business language. In this case, our opening balance is against the retained earnings, which is retained earnings. It's your equity, it's your accumulated profit over the years or over the months, the profit that we would have accumulated. So on 1 August, we then say we've got an opening balance, 3,750. So this is how you record the double entry. And then we come back to our cash book, which is our business cash book. And then we look at transaction number 2, which says we paid Telkom 750. So this is our receipt side. The blue side is our payment side. And on 2 August 2021, we paid Telkom. And how much did we pay? 750. So that's how we record. Okay, because we are paying Telkom, it could be that our payment to Telkom is because we have an account with Telkom already. So we have received the invoice probably in July, and then now we are paying beginning of August because already they have sent us an invoice and we have captured that invoice. And now what we are now just doing is paying, or it could be that like now what I've explained to you, we are now only using EFTs. So you find these payments that we are doing to Telkom, it could be that they've already debited our account or we are paying. This is when we record the transaction. So if we are recording the transaction for the first time, there is then no need for you to create an account for Telkom. But if we have an account with them where they allow us credit, then it's fine. We can record them as a creditor, and then whenever they give us an invoice, we record against them. And whenever we receive an invoice, we then do our double entry by debiting the expense and crediting the creditor, which is Telkom. When we are doing our payments, then it's vice versa. We are crediting the cash book, we debit Telkom, so that at the end of the day, that invoice that we would have recognized is cleared off. Hopefully you do understand that. And unfortunately, I'm not going to record all the ledgers because we are now past our time and I want to go somewhere. And then we bought stationery at CAN for 300. It is when on 4 August. So it's a purchase, it's a payment. We come 4 August on the credit side, we record it. How much is that? 300. 25 August, we paid a salary amounting to 6,000 to the secretary. Then we come 25 August. And it's stationary, it's salary. Wages, salaries. We are paying. In this case, we are not deducting anything. We're not told to deduct anything. So in my questions, I will tell you if we are deducting anything. Remember, I said that we are supposed to register for UIF, which is a statutory requirement. So when we are paying our juniors, we have to deduct UIF. And if ever they are above the tax threshold, then we have to deduct the tax. So in the questions that I normally give, then I specify for you. Where it's not specified to say deduct UIF, then there's no need for you to deduct. So you just pay as instructed, as what the firm has done. If the firm has paid 6,000, in the cash book we pay 6,000 because that is the amount of money that is going to come out of our account. If ever it was an error of paying 6,000 instead of paying after deducting UIF, you would find then you are instructed to say next month, can you deduct UIF twice? Then you correct the situation. And then 25 August, the practitioner withdrew 5,000 for themselves. So that one, if it's a sole practice, we call it withdrawals. It's a drawing, sorry, it's a drawing. We create a drawings account, and that drawings account, then that is where we post all the transactions that the owner would have transacted on for themselves. Say for instance, they go and buy groceries, then we call it a drawing. We post it to the drawings account. So what we do is that we also create a drawings account where we post these transactions where the practitioner is taking money out of the practice. And then we paid on 25 August, we paid rent to MST Investment. So in this case, we post to our rent expense account. And how much did we pay? 2,400. And then we purchased a computer. On 25 August, we purchased a computer monitor at Incredible Solutions for 799. So under computer expenses, monitor, how much? 799.99. And the last one is bank charges. 31 August 2021. Then we've got our bank charges. This is what the bank levies for maintaining an account. So as you can see, we have posted the business transactions, but if you can have a look at it, this is it's a one practice, one firm. So we have a trust account. So if we go back to the trust account, at one point, we transferred some fees. So if we can go back, we then check when did we transfer, when were we instructed to transfer fees. So if you can see on 25 August, we transferred fees of 15,000 from the Govender matter. So when you do that fee journal, remember it also takes us to the business account. These are fees that belong to the business. So at the end of the day, we should make sure that we also record those fees. So the journal entry makes us able to record the transaction in the business and as well as the trust account. So it's more of like our book of prime entry, then we come and record our fees. You should always check for these fees. I always try to in the questions to remind you by mentioning that on this day we transferred fees. But where I do not remind you, we are always working on a question would cover a firm, and what happens in the trust account should also happen in the business account. It's one firm, and usually all the transactions, even if they are separated, if I separate the transactions and say this is conveyancing, this is collections, this is what, but all the money went into one trust account, what you do is that you come and record one cash book. It's a joint one cash book, because when you pull out the bank statement, it is for a one cash book. So that's what we do. So you come, like in this case, on the 25th again, we had fees that we transferred from Maluleke Meta. So the fees that we transferred were 9,750, like that. So I would say I am done with my cash book. Okay. I'm going to maximize. So this is my business cash book, and then I have recorded it. So to balance it off, as you can see, this is the side with a higher amount, which is that 28,500. And then you say 28,500 minus this side, you get your 13,070.01. So you would have balanced your cash book. Yes. Sorry, I can't proceed. We are way above our time. So hopefully,
Also the camera.
yeah,
Also the camera.
Kaya, you can switch off your camera. Okay. Okay, I think I've illustrated how to record our cash books, both the business and the trust. I don't know if you've got any other questions that you could be having, because we are past our time, which we are supposed to run up to 6 p.m. Any other questions? So yeah, I would like to thank you so much. Yeah, this is this subject takes all our energy. It takes all our energy. You find we've exhausted our 2 hours and we've got a lot still to cover. But I want to thank you all for attending. I look forward to presenting again to you in our next webinar, which we will announce to you. And I think it's there on our calendar. You should check it. And then if ever you have any other questions, you can post on the forum, then I'll be able to answer. Thank you all and have a good night.